Hey everyone, it's Hamish from the Young Investors Podcast. Myself and Brandon are excited to bring you your weekly rundown of the latest business and investing news from around the world. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing, make sure you reach out to a qualified financial advisor. But with that said, let's get into another episode of the Young Investors Podcast. All right, welcome back, everybody. Welcome back, Brandon. You've got a bit of a different background there.
I do.
Where are you?
I'm on the road. I'm over in Perth. I'm about to go down to the beach. No, I wish like Perth was as warm as Queensland.
Yeah, what's
winter.
the weather like over there at the moment? I don't even know.
It's chilly. It's not as cold as Canberra, or it's probably not as cold as Melbourne.
No.
But I think it's going to be overcast and a bit rainy the next few days, but then it's going to fine up and we're going to have maybe a couple of days of 16, 17, 18 degrees and sunny, which would be nice. But yeah, no, I like it over here. Perth's great. We got they've got some very, very nice beaches over in Perth. So no, it's a good place. I like it. How you been going? I'm sure that no surprises. You're still in Melbourne in your same bedroom that you haven't left for 3 weeks. How are you going?
I am. Actually, you know what? I have this same setup in like 20 different places all around the world. So you never actually really know where I am. I could be in Japan right now. I could be in Italy. No, you're right. I haven't left the house. But it's
yeah. One thing I was going to say real quick. When I met Andre Jick, or maybe I'm not supposed to say this. This is a little top secret. But he moved houses, but he replicated his set perfectly at his next house. So nobody actually knew that he had moved. It was unbelievable. And he showed me. I was like, holy moly, that looks exactly the same.
Yeah.
It was crazy.
Yeah, it's interesting to do that, just to have the continuity in your videos. Probably quite difficult to do as well. If there's any kind of like natural light involved, or even just the different types of rooms that you'd be moving into. But at the same time, it's kind of interesting move, because it's like, wouldn't you want to take that opportunity to like create a new environment?
Yeah.
I guess maybe not.
That's what I think.
Yeah.
Yeah. No, it was pretty crazy. He has a crazy setup though. Crazy setup. Really cool. I like his place a lot, actually. Yeah.
Yeah. One day we'll get a place. We'll have a place at each like that. But for now, I'll have to settle with what I've got. But it's an interesting week. Last week was fairly quiet, but we've actually got quite a few little interesting stories to talk about today. We've got some news out of Mr. Warren Buffett, which is fairly infrequent to hear something that he's been doing in the markets. We've got a couple of lawsuits going on between some big companies. We've got the US government involved. We've got Amazon involved. We've got Alphabet involved. Some big companies.
Spicy.
And what else have we got? We've got some information out of the Fed as well from Jerome Powell on where we're heading with interest rates.
There is actually quite a bit to talk about. I thought it was going to be another slow news week, but there has been some stuff come up. This Amazon stuff is interesting. I'm very interested to hear your take on it as well, because it's finally happened, everyone. But I guess we'll talk about that in a second.
Yeah. So with that said, today's episode is sponsored by Sharesight, which is an application you can use to track the performance of your stock portfolio. So you can bring in all of your trades either automatically by connecting your broker to Sharesight, or you can do it manually using Excel through your broker, or entering in your trades one by one. And when you do that, it will track all the gains and losses in your portfolio. So capital gains, dividends. If you have dividend reinvestment plans on kind of ETFs or that sort of thing, it will do those calculations for you, which is a lifesaver. Currency gains, if you're buying shares internationally or you just hold foreign currencies. And then you can also use it for when it comes to tax time, which is, of course, upon us if you're Australian. So Sharesight generates up to 12 different reports that can be used to track the performance of your portfolio, as well as used at tax time to work out things such as capital gains, dividend income, and more. At the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That site spelled SIGHT, sharesight.com/young investors. So use that link. You can sign up to their free plan and use it for as long as you want. I think you can track up to 10 holdings, or you can sign up to a more premium plan for more reporting and more features, benchmarking against indexes and that sort of thing. And if you do that, you'll get 4 months off an annual subscription, which is 33% off. So go check it out if you're interested. And as always, thanks to those who have used our link when signing up to Sharesight and are supporting the podcast.
You want to take us through what Mr. Warren Buffett was, his little bit of news with his Japan stocks? You want to start there, maybe?
Yeah, I think it's a good place to start because I'm sure a lot of people care about what Warren Buffett has been doing, especially when it comes to moves in the market. And it's a relatively short story as well. There's not too much, meat on the bone of this story. But essentially on Monday, Berkshire Hathaway increased its investment in those 5 Japanese trading firms that it's been kind of slowly buying a little bit more of over really the past couple of years. So on Monday, its wholly owned subsidiary, Berkshire's wholly owned subsidiary, National Indemnity Company, increased its stake to average more than 8.5% of each company.
Ooh.
So,
he's getting closer.
He's edging his way towards the 10% mark. And for those who are unaware, if you're looking in kind of Berkshire's 13F filing that comes out every quarter to talk about what positions they have, you actually won't see these Japanese investments there. First of all, it's because they're not US companies. But even if you look on the major shareholders of these Japanese companies, you actually won't see Berkshire listed, and it's because they're actually buying them through National Indemnity. It's like kind of a sneaky way that they're kind of investing with one of their wholly owned subsidiaries rather than the broader Berkshire holding company. So.
Yeah, it is because I remember getting a bit stumped by that, trying to look for it and you just can't find it. Even if you look at something like a ticker.com, it doesn't come up, I don't think. But yeah, because it's actually not technically Berkshire Hathaway, it is National Indemnity. Yep. I wonder what advantages that gives them. What advantage? I have no idea. Like why have they done it like that? I'm not entirely sure.
I don't know. I'd have to ask someone because, of course, it has something to do with how, Buffett for a very long time, well, this is just kind of how he does business, is he uses the insurance float, the money coming in from insurance premiums to invest capital. But he, within Berkshire owns, a number of insurance units. So it would be interesting to talk to someone in the insurance space to know exactly what the benefits are of them buying through just the Berkshire holding company or buying through a wholly owned subsidiary like National Indemnity. It would be interesting to find out why that's the case. But the 5 companies, just as a kind of a reminder, are the 5 out of, I think 6 or 7. No, sorry, it's 7 trading houses in Japan. So the 5 that Berkshire now owns a piece of are Itoshu, Marubeni, Mitsubishi, Mitsui, and Sumitomo. So, and I think they're the 5 largest out of the 7 trading firms, which primarily kind of control pretty much all of Japan's imports. So importing commodities and then kind of basically acting as kind of a middleman between importing those products and then kind of distributing them to companies across Japan and then other countries kind of in the Southeast Asian region.
Interesting. There you go.
Yeah, so the news from this week is that they basically just increased the stake from about 7.5% to about 8.5% in each one. And it was only a couple of months ago in April where they increased from 6.5%. So every couple of months it seems like he's kind of looking at the price and trying to increase his investments as the price kind of becomes more attractive. And yeah, as you said, he's edging closer to the 10% mark, which he did pledge that he would only buy 9.9% of each of the firms. So yeah, he's getting very close.
That's true. No, honestly, I think he's not going to buy more than 10%. It seemed like they had a very strong. This is how things fly in Japan anyway. There's a very strong culture of respect and sticking to your word and that kind of thing. But Buffett has many times said that he won't buy any more than 9.9% of those firms. So don't expect that number. What did you say the average is? More than 8.5 in each on average?
Yeah.
Yeah, I don't think that will go too much further without something, at least without Buffett going over there and having a proper chat. But I just don't think it's going to happen. I don't see it. Buffett really doesn't like that red tape. He never has. He's always stopped before he hits 10%. There's only a very select few businesses that he owns more than 10% of because he just doesn't want that extra red tape. He doesn't want it. He doesn't want to have to report because once you go over 10%, you just have to report every time you do anything, right?
Yeah, I think, I believe because they're Japanese holdings, he has to report when he's buying and selling. At least it's now 2 days because he's over 5%. Yeah. But there are additional kind of regulatory loopholes to jump through. In most countries, when you go over the 10% mark, you become kind of what's considered a material shareholder with significant influence. So you're certainly a lot more scrutinized. So yeah, but that's it. Yeah. That's it for the story.
Oh, okay. No worries. Very interesting. All right, I got to talk to you about this Amazon story. This one just hit me right in the feels. I'm actually so glad this is happening, to be truthful. I'm so glad that this is happening. The headline is quite simply, FTC sues Amazon. So the Federal Trade Commission on Wednesday sued Amazon, alleging the nation's dominant online retailer intentionally duped millions of customers into signing up for its mainstay Prime program and sabotaged their attempts to cancel. Finally, someone has clued in on what Amazon is doing.
Yeah.
Have you had this experience as well in the past?
Yeah, at first I wasn't exactly sure what this lawsuit was going to be about, but then as soon as you mentioned Prime, it makes perfect sense because they're one of those few companies that just make it so hard for you to cancel.
It's so hard to cancel. It's also so easy to opt into. Like I remember, I don't know if it's different in the States, but we're over here in Australia and we still use Amazon. So I make my Amazon account and then in the massive clickable button right next to, the buy, right next to the product and the buy button is buy now and get free or instant one-day delivery with Amazon Prime. But once you click on that button, it doesn't say, oh, by the way, this is a subscription. It's going to keep coming out of your account. You don't have to sign a T's and C's. You just click that button and it's like, all right, yeah, no worries. Yep, all good. Yeah. And then months later, you see that Amazon's just taking money out of your account. You're like, what the heck is this? And then lo and behold, turns out you signed up to a full delivery subscription service just through one click of a button.
There's a bunch of those across their entire website as well. Another one is they own the live streaming platform Twitch. And as a part of owning Amazon Prime...
Do they?
They do. And as a part of being a Prime member, you can get one subscription for free to anyone on the platform. But if you don't have Prime, you can still click the button that says free Prime subscription. But it doesn't tell you that it's not really free. It's only free if you have Prime already. If you click the button and you don't have Prime, it signs you up to Prime. And there's a bunch of them. Even on their video platform, I'm pretty sure you can just... Even if you don't have Prime, you can go on the video website and browse through movies. And as soon as you click on a movie and click play, it then triggers the you need Prime. So it signs you up. So there's a bunch of them. Yep. They're the king of tricking you into signing up.
Yeah. They are the king. It says here the agency claims Amazon violated the FTC Act and the Restore Online Shoppers Confidence Act by using so-called dark patterns or deceptive design tactics meant to steer users towards a specific choice to push consumers to enroll in Prime without their consent. Quote, Amazon tricked and trapped people into recurring subscriptions without their consent, not only frustrating users, but also costing them significant money, FTC Chair Lena Khan said in a statement. Amazon spokesperson Heather Lehman said in a statement that the FTC's claims are, guess what, Hamish, false on the facts and the law. The truth is that customers love Prime, and by design, we make it clear and simple for customers to both sign up and to cancel their Prime membership, Lehman said. As with all our products and services, we continually listen to customer feedback and look for ways to improve the customer experience, and we look forward to the facts becoming clear as this case plays out. Why would they be looking forward to the facts coming out? Because the facts are that it's very deceptive.
Man.
Dear.
Yeah, canceling's the other one. I swear they have it's just so frustrating to figure out where you have to cancel first. And then they just try you go through a number of screens where they're like, but you'll miss out on this. But you'll miss out on this.
Are you really sure?
Yes, I'm sure.
But are you positive that you're sure? But are you absolutely positive that you're sure?
Yeah, crazy.
I mean, honestly, I don't know. I've never cancelled a subscription with Amazon because I don't know how.
It's too hard. You have to go physically to the warehouse to cancel it.
Yeah. The X amount of dollars per month is easier than the emotional trauma of actually going through the process to try and cancel.
Yeah.
It's better for my mental health if I just keep paying.
Oh, dear.
It says here the FTC had been investigating sign-up and cancellation processes for Amazon's Prime program since March 2021. Tensions flared between Amazon and the FTC when the agency sought to have CEO Andy Jassy and founder Jeff Bezos testify on the company's Prime practices. Amazon argued the request would be unduly and burdensome, which the FTC rejected. Launched in 2005, the Prime program has grown to become one of the most popular subscription services in the world, with more than 200 million members globally, and has generated billions of dollars for Amazon. Memberships cost $139 a year and includes perks like free shipping and access to streaming content. The lawsuit filed in U.S. District Court for the Western District of Washington accuses Amazon leadership of slowing or rejecting changes that would have made it easier for users to cancel Prime because those changes, quote, or adversely affected Amazon's bottom line. Amazon made it difficult for consumers to buy items on its site without Prime, and a button that instructed users to complete their transaction did not clearly state that they were also agreeing to join Prime for a recurring subscription, the complaint states. The cancellation process is also difficult to navigate and is designed to deter customers from ending their Prime subscription, the FTC alleged. Amazon used an internal term called Iliad to describe the process, referencing Homer's epic poem about the Trojan War, the agency said, citing a report by Insider. The complaint marks the third case the FTC has brought against Amazon in the last month. Amazon in late May agreed to pay the agency more than $30 million to settle cases alleging privacy lapses in its Alexa and Ring units. The company said it disagreed with the FTC's claims, but that it settled in order to move on from the matter.
Yes.
There you go.
Yes,
hey?
A corporation paying to not take responsibility. That's new.
That's the system we live in, isn't it?
Interesting.
Yeah. Thoughts? What do you think's going to happen?
I mean, as I said,
surely FTC wins. Surely, come on us.
As I said a couple of weeks ago, you don't win against the US government. So
yeah, that's true.
No, I don't know. It would. That's the thing. These are all very gray area matters, I guess. What's deceptive? What's a fair business practice? Is it reasonable for Amazon to try and convince you not to cancel when you go to the page, or is that just a hindrance that shouldn't be there? Should it be one-click cancel? These are all questions that need case law like this to settle. And you could make very reasonable arguments on both sides, I think. So I don't know.
I think it's fair. I think my opinion is that it's fair that consumers understand what they're getting into, and there should be some sort, like if there's going to be a button that signs you up, then the button needs to say, try Amazon Prime for 1-day delivery, and this signs you up to a subscription that costs you this amount per month. Yep. Like, I know that doesn't work like website design. That would be a terrible name to put on a button. But that's what the button needs to say. Instead of just sign up to Prime and experience 1-day delivery, and then you click it and then you've signed up. I think it just needs to, I just need think the problem here is the transparency. It's not clear and it's not transparent.
Yeah.
And the same thing, I think that consumers have the right to be able to cancel their whatever they've subscribed to without having to go through heaps of rigmarole. So it should just be like, you know, in the same way that some of the social media apps, I can't remember which one it was, if you are tasked with the objective of signing out of your account, good luck. It is so hard. I think maybe it's Instagram or it might be Facebook. I can't remember. One of them, it is so hard to figure out how to sign up. I literally had to Google, how do I sign out of Facebook or whatever it was. I don't want to name names, but it was one of them. I literally had to you click on account settings and then you click on a particular menu item. And then after that menu, you go to the subcategory of this, you click on that and then you go right to the bottom and then you click on one more thing and then you can sign out.
It's just buried. Yeah.
Yeah, it's buried. It's you know, they don't want you to sign out, you know? They want you to so anyway, I think it just I kind of side with the consumer on this. I think it just needs to be clear, not deceptive. I hate deceptive tactics. Always have.
Yeah.
But yeah, I don't know. I imagine I don't know, what's your thoughts? Similar?
Yeah, I'm the same. Yeah, I think I think at least twice I've accidentally signed up to Amazon Prime because I tend to I tend to put it on and off every few months. Like if I'm buying, if I know I'm going to be ordering a bunch of stuff off Amazon, then I'll have it, and you know I get to watch some of the movies on there as well as a side benefit. But otherwise, I don't really use it that religiously, so I tend to turn it off and on. But yeah, there's definitely been a couple of times where I've accidentally turned it on, or I've just I've just checked my account. And I'm like, wow, okay, I've just been paying for the last 4 months and I didn't even know.
Yeah. Because that's a problem. I mean, if that's really the problem. If it's deceptive and you don't realize you've signed up to something, then for a lot of people, they will start paying for it for months before they actually realize. And maybe you can say that's on them. They need to be checking their bank accounts, blah, blah, blah. But I don't really think it's on them because obviously you're not going to check things if you don't think that could be a reality. Yeah.
Yeah.
You know? So anyway.
From one lawsuit to another, from one tech giant to another, there's a battle going on that started this week between the newspapers and the digital advertising giants, which is
of course.
It gave me an excuse to kind of look into some of the statistics around digital advertising as well, which I hadn't looked at in a little while. So I'll bring it all, package it all together. We'll talk about the lawsuit and then we'll talk about really how much dominance Google really does have in this space. But essentially,
spoiler alert: is it a lot?
No, actually, they're not a monopoly. They actually don't have that much market share at all. Jokes.
Oh, interesting.
Yeah.
Tell me more.
Yeah. So this isn't. It's a lawsuit around anti-competitiveness and Google's no stranger to antitrust related lawsuits, whether they're coming from...
It's a non-recurring expense, Hamish. It's a non-recurring expense.
Exactly right. A non-recurring $5 billion expense.
But that happens every year without fail. Something up with that. But essentially the lawsuit this week is from Gannett, who filed a lawsuit against Google. Gannett is a newspaper media company. They're actually the largest newspaper media company by daily circulation. So by the number of newspapers in circulation, they're the largest. I don't know, what is that, like 4 now? Like, was there like 4 newspapers in circulation? Something like that. But the biggest paper they own is USA Daily. So some people might know that newspaper. I think I've heard of them. I think. Honestly, I've never heard of it. How crazy is that?
Yeah.
I mean, I've so moved on from newspapers that I've never even heard of this. How crazy.
Yeah. Yeah. The only newspapers I've heard of are like the ones that have now built reasonable online publishing websites, like the Wall Street Journal.
Yeah.
And that's about it. But in the lawsuit, I was trying to think of another one, and I can't. We got the New York Times, but if you want to read about FTX and Theranos, but
and how great they are.
Yeah, exactly, and how awesome they are,
and how their founders just have it so hard.
Yeah, exactly right. In the lawsuit, Gannett argues that although the digital ad market has exploded, publishers do not see much of that money because Google and Alphabet have, quote, acquired and maintain monopolies for ad tech. So pretty straight down the line, antitrust related lawsuit. They're alleging that the company is, quote, the dominant player for each step of the ad selling process. So I thought it'd be interesting to explore what it is they actually mean by that, because I think a lot of people just kind of think, oh yeah, they sell ads. Like that's just, it's a one-step process. They just sell ads, but there's actually quite a process involved in selling ads. There's kind of a number of different stages, and they're actually alleging that Google has too much dominance on each of these steps.
Right.
And how they've kind of built that over time. So in their really early years, Google first created what's called AdWords. And AdWords is essentially an algorithmic bidding system that allows businesses to bid for ad placements. So this is how most digital advertisements are placed these days, is you're not actually having a personal relationship with an ad seller or anything like that. You're just using a system that allows you to bid for placements, where you want to put the ads, who do you want them to be in front of, and how much are you willing to pay for those ads and that sort of thing. So that's kind of one side. And then Google then after that created Google AdSense, which is a piece of software that allows websites and publishers to allocate space for advertising on their sites. So if you have a website, you can kind of pick a banner and you can say, hey, Google, I want you to run ads, in this particular section of the website. So essentially Google very early on controlled the relationship with ad buyers and also the relationship with ad sellers, with them kind of being the middleman between those two things, but having relationships with both sides. And up until 2007, you could probably say this wasn't too much of a market dominance issue because most of this was around search advertising. So at this point, they weren't really doing any display advertising. It was mostly that they were a massive search engine and they were allowing businesses to rank on those searches. But then in 2007, they acquired a company called DoubleClick for $3.1 billion. And this is essentially a piece of software that allowed them to do display advertising. And it actually came less than a year after they acquired YouTube. So you can very kind of quickly see that around 2007, they started to build a vision of how they were going to control the digital advertising space. They had kind of search ads on lock, and they started to buy pieces of software. They bought the video platform, then they bought the software and the kind of the back end for the display ads. They started to build out significant control. And
yeah, you can see their strategy forming.
Exactly. And the interesting thing about DoubleClick is it also gave them a system for building one-to-one relationships with publishers, advertisers, and brands. So up until that point, most of Google's advertising had been all algorithmic, and a lot of their advertising is still algorithmic. As I said, kind of people just put in bids. But today, they have a very large part of their business is these custom relationships with massive brands, right? Like Coca-Cola, for example, isn't logging into AdWords and building a profile and then spending $1 billion on YouTube ads. They have a one-to-one relationship with Google, and they have a custom relationship, a custom contract. And DoubleClick, which they acquired in 2007, actually provided them the systems and a lot of those relationships already. So essentially, it's interesting because Garnett was essentially arguing that newspapers like USA Today that they own essentially had no choice after Google did all of these acquisitions, but to deal with Google in some way, whether it's through kind of the algorithmic bidding or whether it's through the one-to-one relationships they used to have through DoubleClick was now controlled by Google as well, which is really interesting to kind of get into like the back end of the different systems that Google really controls in this kind of this new space. So then Google essentially responded. Do you want to have a guess? Do you reckon they think that they have too much market power?
They probably did a thorough review of their systems, and they probably came to the conclusion that actually, you know what, we've been a very successful business, and we do have a lot of dominance in this space.
Yeah.
And thank you for bringing that to our attention. We're going to take instant action on it. We're actually going to break up our business into multiple segments. We're going to sell some of those businesses to our competitors to make it a more competitive landscape. And lastly, that I imagine they would have apologized for not identifying this monopoly earlier, and will probably be refunding some of the clients as some goodwill, before going forward. Is that what they did?
Yeah, pretty much. As a side note, by the way, it would be interesting to no, they didn't do that. But as a side note, it would be interesting to see. Do you ever foresee a point in the future where Google is forced to break up some of their businesses? Like, do you reckon they'll ever have to
I don't know.
give up control of? Because you can kind of think of like YouTube is kind of like a publishing platform. So they, when it comes to YouTube and video, they own the publishing and they own the ad sales. Like, they own the entire end-to-end process. Like, there's nothing that they don't own except the content creation, but they pay us out a portion of the revenue. So that's a really interesting situation. You never, like, even when newspapers were and television was the primary way that people advertised, in a lot of cases they were working with an ad sales company that kind of dealt with all of the ad sales, that dealt with the ad buyers. So it is an interesting dynamic. They certainly have significant power.
A monopoly?
No, don't use the dreaded.
No. Oh, yeah. Whoa, all right.
I think you misspoke. Duopoly. Right. There's a competitor.
Duopoly.
There is a competitor.
Okay. I publicly apologize.
Yeah. You'll be getting a warning on your YouTube account. You just see it.
Gonna get a strike. I'm gonna get a strike on my YouTube channel now.
Like, community guidelines. Yeah,
you violate the community guidelines. It's like in the community guidelines, it's just like you must not talk negatively. You must bring our monopoly to light. You must not talk negatively about our business. You must not suggest that this company be broken up. That's against our community guidelines.
Yeah.
How dare you? Honestly, to answer your question, I don't know if there will ever be a time where like these big companies get broken up, because I don't know, maybe I'm a skeptic, maybe I'm a pessimist, but I feel like if you have the most money, like even looking at lobbying, how lobbying works, like I feel like if you have the most money, you're going to be fine, because you can always, as sad as it is, you can always just pay for an outcome that you want. So I don't know if anyone's played that game Cyberpunk 2077, but in that game, it's obviously a futuristic kind of cyberpunk game, but the whole city is controlled by like 5 megacorps. It's like politics is out the window, crime's through the roof, because the people that control the city is like 5 megacorporations. And I feel like that's gonna happen one day. Like I can't help but think that that's what's gonna happen. But I don't know. So that's my washed opinion. What's your washed opinion? Do you think they ever get broken up?
I think maybe. I mean, the US has done it before. I think that they've broken up large conglomerates before. They just haven't done it in a very long time, because there hasn't been businesses with as significant power as there was about 100 years ago. A lot of industries were completely owned by basically single families, whether it was oil or railways or whatever. I don't know though. I don't know. Yeah.
We'll have to wait and see. Classic young investor style.
That's right. But anyway, Google's response. So no, they didn't. They didn't take responsibility. They didn't turn into a not for profit. They said Dan Taylor, the VP of Google Ads. They always put the vice president up. By the way, you notice that the president gets to not take any media heat. It's always the VP. Anyway, they said these claims are simply wrong. In a statement, publishers have many options to choose from when it comes to using advertising technology to monetize. In fact, Gannett uses dozens of competing ad services, including Google Ad Manager. So, okay. And when publishers choose to use Google tools, they keep the vast majority of revenue. We'll show the court how our advertising products benefit publishers and help them fund their content online. So, pretty stock standard.
I mean, that's a. Also, did they just say that there's dozens of ads? Okay,
Yeah.
I understand. They're not saying. Yeah,
They're not
saying. There's dozens of competing ones, like our system.
Yeah, the way they worded that was
there's
pretty
dozens
funny.
of options, and one of them is our system.
Yeah. But the way they worded that was very funny. I thought that was hilarious. It sounds like they're like, there's heaps of options. You can use AdSense.
Yeah.
You can use Google Ad Manager. You can post stuff on YouTube.
Oh, that's great. Yeah, that is exactly how that reads, isn't it?
Yeah.
Well, but then again, like this will be interesting because I do think they probably have. I don't know. They still have a point. Like at the end of the day, no one's going to use their service unless it works, and like advertisers aren't going to advertise unless they see a benefit.
Yeah.
So if they choose to advertise with Google, even if they have a monopoly, it still has to work for them.
Yes.
So like if I say sold my courses or something and I went through Google and I advertised those courses, if I just wasn't getting any sales through working with Google, I'm not going to keep giving them money. I'm going to save that money. I'm going to stop doing that. So, I mean, it's an interesting argument because at the end of the day, it still has to be a good, a good economic choice for these businesses. So, I don't know. We'll see.
Yeah, I mean, it's definitely not. I think there's good argument. Again, there's good arguments on both sides. I think clearly Google has done an incredible service to the advertising industry in terms of the amount of data aggregation that they do and making effective advertisements that deliver much better results than newspaper ads could ever possibly deliver for you. And as a result of that, the entire ad market has grown. It's not just that ad dollars are shifting away from traditional means to digital. The ad market is exploding because advertisers are getting a better return on their investment. So they're spending more of their revenue, let's say, a high percentage of their revenue towards advertising because they get a better return on it. So clearly Google has done, has led the way in a number of aspects in terms of evolving the digital ad or just the advertising space in a good way. But the interesting point is they certainly do have market dominance. So as I said, I kind of went and looked at some data just kind of related to this because I thought I was just curious to see how Google, Google's a struggling company. I wanted to make sure they're doing okay. I want to make sure they're still handling themselves. But all of this data comes from Dentsu Aegis, which puts out every couple of months a complete global digital ad spend report. And it's got a ton of interesting stuff if you're curious about this. I love nerding out on advertising spend. If you're interested in that stuff, go check out their analysis because it's completely free. But the global digital advertising spend in 2022 was $394 billion. So it's an enormous market. And Google's advertising revenue in 2022 was $225 billion, which is 57% of the global digital advertising market. So I think it's fair to say they've got, considerable market power. Outside of...
It's interesting because I was just going to say, like, there are other... I mean, Apple has about that same dominance in App Store revenue, in global App Store revenue share. I mean, TSMC has about that same dominance in semiconductor manufacturing. So it's not like this is, these things do exist and some of them, just fly under the radar. So it's interesting that this one kind of comes up now.
Yeah, for sure. And like another interesting aspect. So outside of digital advertising, so kind of non-digital advertising, traditional advertising, still represents 42% of all advertising. So only 58% of advertising is digital. And you'd potentially expect that. Well, first of all, you'd expect that a lot of advertising will remain not digital. Out of home advertising, billboards, that kind of thing.
Yep.
You'd still expect some, but over time you'd expect a lot to be transferring into digital, whether it's television ads, radio, newspapers, even cinema. You'd probably expect to potentially decline over time as a percentage of the whole pie as people spend more time at home. Everyone gets their gets their headset on and has the cinema in home.
That's right.
Yeah, you just know that's going to happen. No, but
Apple Vision Pro, here we come.
Yep, exactly right. But you would expect that over time, that market's going to continue to grow. And of the digital advertising spend, the types of advertising Google does are the ones that represent the majority of the industry. So 88% of digital advertising is either display ads or search ads, which are the two areas that about 15 years ago, Google realized that they wanted to start making a bunch of acquisitions before the FTC kind of realized the dominance they were about to enjoy.
It's interesting. It's such an interesting idea that businesses they make really, really good moves. I mean, credit to Google's management for doing this stuff back in the day. They make these great moves that benefit shareholders. They make that. It's not like it just happens. Like, they just became a monopoly. No, they worked really hard to make the business moves or grow their business so that they became number one. Like, they worked to do that. It's kind of funny in a way that this system is like, okay, congratulations on getting there. Now, because you're there, we're going to punish you,
Yeah, it's kind of like when people argue that Meta buying Instagram was stifling competition. That's a ridiculous claim if you understand what Instagram looked like at the time. It wasn't even the biggest photo sharing app of its kind. They bought it for $1 billion. It had some users, significant amount of users, but what the Instagram that exists today is a dramatically different product than the Instagram that was created before Meta took it over. So it is interesting to see, and a lot of these acquisitions will go under the radar, because these acquisitions are going to be happening today, right? This year, businesses will be making acquisitions that are going to plant seeds for the next 15 years, and it's often the ones that are for back end and for software that just fly under the radar. Like, no one's really thinking, like the DoubleClick acquisition by Google, it didn't really add any customer facing products. It was really just software that they're buying. They're buying kind of the infrastructure on the back end to build out this future that they envisioned that it ultimately came true. Even YouTube was a dramatically different product than what it is today. Very few people would have thought that YouTube in 2007 or 8, when it was only a couple of years old, was going to turn into what it is today. Props to them for being able to do that. The flip side of them having too much market dominance is that for a very long time in digital advertising, it's really been Google and Meta. This the two duopoly, the giants controlling 90+% of the advertising market. That seems to be shrinking in some aspects. Amazon, for example, is starting to kind of carve out some of the market for searching for e-commerce. So instead of people searching through Google for e-commerce, a lot of that traffic is now going through Amazon, and Amazon runs their own kind of advertising infrastructure there. And then you actually have a lot of media companies now that own streaming services, and a lot of those streaming services offer advertising, which is kind of a few years ago, you might have thought, well, all of the advertising from television is going to go onto YouTube. Like, that's the most natural progression. But an even more natural progression is a lot of television advertising going onto streaming services. So sure, YouTube probably has a much better ad system in place, and a lot of advertising will continue to go there. But it'll be maybe potentially spread a little bit more thinly between, at least at the margins, between a bunch of new companies entering the digital advertising space.
There you go. Yeah, there's definitely, you're right, there definitely are other avenues. They obviously have quite a duopoly. But yeah, I never really thought about that before. There are new ways that it's kind of been broken up a little bit more, but still we'll have to wait and see if that actually becomes a significant chunk of the pie because it's not at the moment.
Yeah. No.
Yeah.
No.
All right, is that all we have to talk about?
That's it. Yeah. What have we got?
All right. I'll quickly just take us through our good old mate Jezza Powell.
What's he doing?
He expects more Fed rate hikes ahead as inflation fight, quote, has a long way to go. So I'll get through this quickly because there's not too much to add. He said Federal Reserve Chairman Jerome Powell on Wednesday affirmed that more interest rate increases are likely ahead until additional progress is made on bringing down inflation. Speaking a week after the Federal Open Market Committee officials decided for the first time in more than a year not to push rates higher, the central bank leader indicated that the move likely was just a brief respite rather than an indication that the Fed is done with their hiking. Quote, nearly all FOMC participants expect that it will be appropriate to raise interest rates somewhat further by the end of the year, Powell said in prepared remarks for testimony he will deliver to the House Financial Services Committee. The speech is part of his semi-annual appearance on Capitol Hill to update lawmakers on monetary policy. Following last week's two-day FOMC meeting, officials indicated they see rate increases totaling 0.5 percentage point through the end of 2023. So another 0.5% by the end of this year. That would indicate 2 additional hikes, assuming quarter point moves. The Fed's benchmark borrowing rate is currently pegged in a range between 5 and 5.25%. So it could go 5.5, 5.75 by the end of this year is what they are anticipating. Thoughts? Inevitable, Hamish? Are you surprised?
Not surprised. You never know what inflation's going to do and what interest rates will do, but also not really surprising that inflation's being a little bit stickier than previously expected. But what is kind of crazy is, it's still only been a year, a bit over a year now, that rates were 0. And now they're at...
Wild.
Well, let's say they get to the end of the year and they do 2 more hikes, almost 6%, which is... It's
quick.
That's crazy. Yeah.
Yep. Boom. Sorry if you own a variable rate home loan. Bang. Gotcha. You didn't see that one coming, did you?
Yeah.
Or maybe you did.
Yep.
You never know. Maybe you did. That is crazy. Inflation has moderated somewhat since the middle of last year, he said. Nonetheless, inflation pressures continue to run high, and the process of getting inflation back down to 2% has a long way to go. Fed officials generally prefer to look at core inflation, which excludes food and energy prices. That is showing inflation running at 4.7% year over year through April, according to the central bank's preferred measure of personal consumption expenditures prices. The core consumer price index for May was 5.3%. I don't think we have to say too much more on that one. Powell said the labour market is still tight, though there are signs that conditions are loosening, such as an increase in labour force participation in the prime 25 to 54 age group and some moderating in wages. However, he noted that the number of open jobs still far exceeds the available labour pool. Quote, we have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy. He said it will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. Yeah.
Interesting.
I'm just quickly reading through the rest of this, but I don't think there's much more. He just basically keeps reaffirming, which I guess is good, that he's not going to let what happened in the 70s happen again.
Yeah. Yeah. One thing kind of not really related to this, but a little bit related. It'd be interesting to see how AI affects unemployment over time, because one thing you can have is you can have a high unemployment rate, not because there's a lack of job openings, but because the job openings are for skills that people don't have. So when you have a rapid technology, you can have a quick transfer in demand for away from certain jobs and towards other jobs. And that can mean there are jobs available. Businesses want people in those areas, and those wages can skyrocket. But at the same time, you can have a lot of people unemployed because they just don't have those skills.
Yeah.
So potentially we could see something like that happening. I think an obvious kind of one would be kind of truck drivers, which I think is like an enormous percentage of men in the US are truck drivers. It's some crazy percentage, like 30% or 50% or something, some crazy number.
Right.
And if there is autonomous vehicles, then you would see a whole lot of people who kind of moving out of those areas, and then the rise of AI, potentially the need for more, I guess, like software engineers and jobs in that realm. And those are two completely different jobs. It's not as if you can just transfer easily to those new skills. So that's an interesting aspect.
It's worth remembering there was once a job called elevator operator. Someone would stand in the lift and they would go up and they would go down. There used to be people that would stand in the factory, the toothpaste factory, and they would literally put the caps on the end of the toothpaste bottles. Not anymore.
That's right.
Yep.
And now he owns a chocolate factory. So
yep. Yeah, true. That's the one, isn't it? That's in Willy Wonka, isn't it? Yeah.
Yeah, I think that's what his dad does, right? He's like, he puts the caps on the.
That's right. That's right. I remember that. And then that's right. And then the robot takes his job. Haha. There you go.
Yeah, exactly right.
So funny. As per Willy Wonka. See example down in the description below. Links to Charlie and the Chocolate Factory.
Yep. Yeah, that could happen to you.
It could.
Yep.
Cool. Sorry, I've completely lost my train of thought. Yeah, I've got nothing else to add on the Fed stuff. Okay. Should we wrap that one up? And do we have one more thing? What's going on over at Block?
Block used to be called Square, right? Is that right?
That is correct.
Why did they change to Block? Block is so much worse. Can we all agree Square was a better name than Block?
Yeah. Block is like Square, but it has more depth.
But like, why wouldn't they? Even Cube, I feel like is better than Block.
Cube.
But Square's better than both of them. Anyway.
Yeah, Square's better. Yeah.
That's not the topic of this story, but I'm curious to hear your thoughts on this because it's kind of dystopian, but it's kind of interesting as well.
All right.
Some people might find this kind of some people are definitely going to hate this, but Block is looking for a new way for brands to advertise their products. The company is looking to patent a platform for customizable e-commerce tags in, quote, real-time multimedia content. So the tech that they're looking to patent, let me explain.
Okay, please explain.
Well, it's not complicated, but the way they describe it is complicated.
Yeah,
but the tech uses computer vision and speech recognition techniques for multimedia analysis to detect when a product is in a video and pull up an e-commerce tag or a pop-up box that displays more information and allows purchases for that product. So, for example, to digest that complex sentence, you could be on Instagram and you might see your friend has posted a photo and they have some shoes, let's say, in that photo that you think are pretty cool. What these tags would ultimately do is you'd be able to click on the shoes, and regardless of whether your friend has tagged that brand in the photo, you would be able to, this technology will be able to automatically detect what those shoes are, and you can go and buy them.
I like
that. I said, I like it too. It's a little dystopian, I think, because they specifically said that they would be looking to implement this on Instagram and YouTube.
Yeah.
And you just hope that this doesn't become super intrusive on the content, because I think immediately my brain went to just everything is just like outlined on a YouTube video, and it's like hat, t-shirt, like sunglasses, like everything, like the light behind you.
Wait, what?
Yeah, that paint is a specific white color you can get from Bunnings. like everything is just advertising.
That's so funny. That would be pretty over the top. But I can see it being very helpful. I mean, how many times have you seen, I wonder what that thing is that they've got in that. You just click on it.
Yeah.
Could catch you out if you have something accidentally in the background of your videos. What is that? Uh-oh.
Yeah, exactly right. But Block said its tech aims to reduce friction of a customer needing to go to a separate website or a page to complete a purchase. Lauren, how do you pronounce that last name?
I don't know.
Tierney.
Tierney.
Investor.
I don't know. That's my best guess.
Who knows? Lauren, investor at venture and digital assets fund Decasonic said, most people buy from their social connections today. They don't buy from targeted marketing ads. I think the future really lies in the idea of more immersive shopping. More immersive shopping will emerge in places that we already consume. I generally agree with that.
Yeah,
I think more and more people are, trusting their social connections, their online social connections for the products and services that they buy, rather than just targeted advertising that you see, whether it's on YouTube or on Facebook. So yeah, not something that's available yet, but certainly interesting.
It's coming.
I'm curious to see how it'll be implemented.
Yep. It's coming, Hamish, just like your big win. It's coming. All right. Well, with that said, do you want to do just a couple questions of Q&A? We've got about 4 minutes, I think, left. So should we do a couple of questions?
Yeah, let's take a look. I guess I'll just start at the top.
Sure. I don't know, Hamish, I feel I've looked at these questions for so many weeks. I feel like we've answered them. I always have this feeling I feel like we've answered them. So if we have, I'm sorry. Are you sure we haven't answered this? Okay. All right. Hit me.
No, I don't think we have. Okay.
That's all right.
How do you
if we have, if we have, we're doing it again.
Yeah. How do you detect when a stock is a falling knife?
Oh, good question. I don't think that you can. I don't think you can tell, this thing's going to fall another 20%. This thing's going to fall another 50%. Who knows? I think that you just have to stay in your lane. You have to look at the businesses that you know are high quality, that are close to home, that you understand really well. And if it does fall, as long as you understand why it's falling and that the fundamentals of the business haven't changed, then I think if it hits a margin of safety price, I'm not gonna hesitate to buy a company that's falling, that's a high quality business, no risk of bankruptcy, or very little risk of bankruptcy. Great financial health, something short term's happened, all the fund managers are selling it, but I want to hold it for 10 years. If that's falling sharply and it hits my margin of safety price, I'm not going to say, but it could be a falling knife. I don't know if that's right or wrong. Hamish, I'd be interested to hear what you have to say about this as well. Because investors do get burnt on stocks that just keep falling in the short term. But I think if you know that this is something that you understand, that it's got great financial health, it's not going to go bankrupt, then I don't see a problem if it hits your margin of safety to start buying it. Yeah. Do you have any thoughts around that?
No, I don't think anybody knows what a stock's going to do in the short term. And I don't know. So some people will say you can, but I'm of the belief you can't tell if a stock's undervalued. I don't think you can tell if it's going to get more undervalued or not. I think you can only look at what price the market is offering you today, and compare it to what you think the company is worth. And in my view, catching a falling knife would refer to, some people would refer to this as buying a stock and it simply falls. I would kind of refer to it as incorrectly valuing the stock and buying it undervalued, or what you believe is undervalued, and then realizing that you're wrong. So and then it falls further.
Right. And then you try and buy more, try and catch it.
Yeah, exactly. But yeah, I don't think you can tell what a stock's going to do in the short term. I'd love to know, because every time I buy something, it falls 50% after I buy it.
It's always the way.
Yeah, that's just the way it goes, and ultimately it doesn't really matter, because what someone's willing to pay for something in the short term doesn't impact its value in 10 years. Or or the cash you can pull out of that business. So it's kind of completely irrelevant. The only point at which it's relevant is if you're wrong about your analysis. Then, buying the stock and it falls 80%, it doesn't necessarily mean it will come back just because you bought it at a higher price. You could be wrong. But yeah, I don't really buy into the whole theory of catching a falling knife and of waiting for the bottom and then waiting for a bit of it to rise.
Who knows if it's the bottom? Yeah.
Exactly. You can't tell. Yeah.
Yeah. I think that in the 2008 global financial crisis, or even even in the tech bubble, the market bounced like 10, 15% heaps of times on the way to a massive low.
Yep.
So you can't really predict it. I need to sneeze. Hamish,
Yeah,
you pick another question.
Where should we go? Let's answer this one. Would you ever interview or analyze a small local? That was a long sneeze. Jeez.
No, it never happened. Never happened.
Okay. I was going to say I was very quiet, and you were gone for a long time. So
yeah, I was just
wondering if you know
trying to sneeze.
Like, do you know what a sneeze is?
Okay, sorry. Yeah. You go ahead. Sorry, I interrupted you.
Yeah, that's okay. Would you ever interview or analyze a small local business that is owned and operated by one of your viewers? You could look at their cash flow and future revenues and expenses.
That'd be really cool.
Interesting.
Yeah, I think that'd be really cool. It's a cool idea. I feel like we've answered this one, Hamish, I gotta say.
Have we?
I don't know. I feel like we have. But no, I think that's a really cool idea. I would actually really like to do that.
Yeah.
I think it would be cool. I don't know. You'd have to title it really well. I'm just thinking about like YouTube content now. You'd have to title it really well. But yeah, I don't know. What do you think?
There'd have to be something horrifically wrong with the business so that you could title it something funny. No, I'm just kidding.
Yeah.
But it is interesting to look at. I do like looking at small business financials. Like even not a small business, even if, one of my friends is working in a small firm of some sort, just hearing, and they kind of therefore have some insight into some of the numbers of the company revenue and how much they spend on marketing. I love just hearing about that stuff because a lot of the time small businesses are just usually they're a lot simpler. So it's a good way to learn about analyzing businesses without the complexity of a big public company with 10 different subsidiaries and, 20 different executives. It might just be, a single bakery or something. And it's just interesting. Yeah. Okay, well, how much do they spend on bread? And does that fluctuate a lot? Do they have to, how do you track, what is in demand? Is it seasonal? It's just interesting to dive into some of that
Break
stuff.
It down.
So, it would be interesting.
Yeah. All right. Very good. Well, that is us done for the day, everybody. We are out of here.
We're done.
I'm going to go walk along the beach. No, not really. It's overcast and a little bit rainy and quite cold over here. I'm going to get back to work. That's what I'm going to do. What do you got on the rest of the day? Work?
I've got to finish, do some editing. Always edit. It's almost always editing.
Edit.
If you ask me what I'm doing, it's like 9 out of 10 times it's editing. So yeah.
If you ask me what I'm doing, 0 out of 10 times it's editing, and I love it that way. I'm so glad that I hired the boys. Thank goodness. But yeah, thank you guys as always for tuning in. We really appreciate it. We are running low on questions. If you wanted to ask us a question, now is an opportune time. So you can either leave it in the Spotify question box, or you can go over to the most recent episode on YouTube and drop us a comment, and we will get through your questions. But yeah, thanks, as I always say, thank you guys very much for giving us an hour of your time. We very much appreciate it. Hopefully you enjoyed the episode. Thanks as always to Hamish for joining me. Thanks to Sharesight for sponsoring, and we'll see you guys in the next one.
See you guys.